Hello guys, me here from the Investing Hub. Welcome back to another episode. Of today we're looking at the S&P 500 on the daily chart, currently trading at around 4,126. Just before we start this analysis, guys, if you would like to join my Signal team, please feel free to scan this QR code on the screen. It will take you straight to my Signal group, completely free of charge. I would love to see you there, guys. Anyway, looking back at the S&P 500, currently trading at around 4,126, we have clearly bounced back from that top of the wedge that we did mention. It was a key area of support. The beginning of trading session yesterday was very negative for the stock market in general. We went all the way down just above that 50-day EMA. We tried breaking below that top of the wedge, but then we bounced back and came back up above it and closed the trading session above the top of the triangular wedge that we have here. Now, where do we go from here in terms of the rate hikes? Now, a lot of investors know that the rate hikes is going to be most likely 0.25 basis points. But the guidance going forward is what's important. Like, a lot of investors were feared of a hawkish sentiment coming out from the Fed, scaring the market and pushing it lower. And providing we don't get a dovish sentiment, I think the market will fall harder. It will go to the 50-day EMA. As for the S&P 500, potentially all the way to the 200-day EMA. Financials were struggling yesterday. The rising interest rates is not really good for banks or stocks. Yeah, dovish sentiment, or if they decide to pivot, then the market will share that. And I think this is when we look for the S&P 500 to go to 4,200 and recover the losses over the past two trading sessions.